is about panic, power, and a fake tweet. How many people actually believed it? No caps, no source, no context. CNBC reads it, Reuters runs with it. Have you ever watched $2.4 trillion appear from a thin air and then vanish because apparently a guy named Walter had a fake tweet? No, of course not. Well, buckle up because this happened this week. Well, I'm Yassi, your host, your guide, and a reminder that Wall Street can be manipulated easier than a crypto bro at an NFT convention. So this is Margin Talk, the show that we discuss Forex, Fintech, and a full-blown financial nonsense, with less fluff and more side-eye than a Fed press conference. And today's episode is about panic, power, and a fake tweet that made the entire stock market go YOLO and then regret everything immediately. Okay, so let's get into it, because the only thing dumber than the tweet was how many people actually believed it. So it's Monday morning. Market's falling, the mood's panic, everyone's checking their feet like, please save us, Daddy Drone, in some few cases, father. Very few. And then boom, a tweet drops. Trump considering 90 days tariff buys for all the countries except China. No caps, no source, no context, posted by a Twitter account named Walter Bloomberg, which is the financial equivalent of getting the medical advice from a guy named Dr. Dre. Not even the real one. But guess what? The market bought it. S&P reverses 500, it drops, gains $2.4 trillion in 18 minutes. CNBC reads it, Reuters runs with it, and suddenly the entire financial industry forgets how to Google. Then at 10:40 a.m., White House says, no, that's not true. Walter deletes the post and $2.5 trillion of market value vanishes. No biggie, just Tuesday stuff. So while this mess was happening, Apple lost $640 billion in the market cap since last Thursday. It's like Switzerland stopped existing. And no one knows why. Maybe it's Vision Pro, or finally it's investors realizing that they've been paying almost $30 for charging bricks. Or maybe the market's just vibing with the chaos. It's bad when your stock chart looks like a ski slope. Meanwhile, here's a headline that deserves standing ovation. Debt investors are outperforming living. Yes, people who forgot their passwords, left their accounts alone, or just straight up died are crushing it. So turns out that this year's best strategy is to do nothing. Absolutely nothing. No hot takes, no meme stalking, no Discord group called Stonk, Folks, Punks, I don't even know. Just peace, quiet and compound interest. Honestly, mood. Okay, over the BlackRock, Larry Fink says that CEOs are already believe that we are in a recession, which is rich, coming from the exact same people who laid off 10% of their staff and called it a strategic reallocation. Morgan Stanley downgraded the entire banking sector. The reason? Increased risk. No kidding, banks right now are like your friend who keeps dating toxic people and then when it ends in fire, acts surprised. Let's talk tariffs. A Yellow study says an average American household could lose almost $3,800 thanks to tariffs. That's enough for rent, groceries, and a therapist to talk about why you were checking your portfolio while market was having this dip. Tariffs are the economic version of arguing with your neighbor while setting your house on fire. Well, meanwhile, Indiana had to fire its Medicaid consultant after a very tiny little mistake. No biggie, just $1 billion forecasting error. Oopsie, not a big deal. It's not a miscalculation, it's congratulations, your Excel sheet made it into the FBI watch list. Somewhere Enron is slow clapping. Bad news for finance pros. Investment banks are slashing headcounts and senior partners at VC firms are peace out in fire. like a fireman. And someone just yelled, Fiscal responsibility.
So now every deals have dried up, hype's over, and every startup pitch is now including the phrase, we're like Uber, but for sadness.
Okay, quick detour for your brain and soul. Today's book pick is Shattered Proof by Dr. Tasha Ulrich, if I say it right. Okay, never mind. It's about how resilience isn't infinite and pretending you're fine isn't a personality, Honestly, resilience is great, but you're allowed to be tired, especially when this economy feels like it's being run by a Reddit thread. So what did you learn today? Fake news can move trillions, dead people are better investors than the living one, tariffs are just financial self-sabotage with tax ID.
Markets are weird, people are weirder. And maybe this year's strategy would be stay calm, stay boring, and toodaloo, Twitter. Forex. I don't care at this point, honestly.
Okay, so that's it for the first ever episode of Margin Talk, where we unpack the market with sharp takes and sharper side-eye. By the way, this entire trade drama is still unfolding. So, if you're listening and somehow the tariffs are reversed, doubled, or turned into NFTs, by the time this drops, don't add me. Okay, subscribe, like, and share it with your friends who keeps yelling, buy the dip, in the group chat. We're gonna be back in 2 weeks with more Fintech, Forex, and Fiscal foolishness.
And until then, stay leveraged, not unhinged.